All right, everybody, good morning. So we are evaluating yesterday's trading session, April 8th, 2024. And the lesson that we're going to learn today is to follow the trend. So we are right about a minute from open. Remember, we are not trading the open. It is way too volatile. We'll be able to get a good look of ATR once everything gets started. We're looking at the wide view right now just so I can have a better idea of the trend, if there is a trend or if we're in consolidation. Obviously, right now you can see that we're having a pretty downward trend starting a couple of minutes ago, 8:24 in the morning, Central Time. The indicator that I use has the moving average in yellow and then utilizes standard deviations. So the dotted line is one standard deviation away, and then the clear lines at the top and bottom are two standard deviations away from the trading session when it began. So at 5 p.m. or whatever time that is. So there's a lot of data, but I am considering, in something off the back test, having this start basically right now. So when the actual trading session happens, just because the data at the beginning of the morning and the volatility is just so much higher than any other part of the day. You see right here, we already had an ATR rise up to 16. So that candle was 16 points high. For me, I always try to wait until at least 8:31, 8:32, but I go by ATR. If there's for some reason a slower day, I might start earlier. That does not happen often. If anything, I have to wait a little bit longer. I want at least consistency under 12, 10 for ATR. For ATR, a lot of people use it to see what the average candle length is. I don't care about that. I just want to be able to see what the current candle is at a glance. And we are about a half a minute away from when I would even consider entering a trade. Right now, the ATR is right around 12, which is, a good place for me to be. I'm happy right now with where the brackets are for the high and low of the current trading session. And by that, I mean from 8:30 onward. And here we go. So now I would be willing, see, now we're consistently below 12. So I'm going to draw some lines here so that I'm able to have a visual representation through time of what the current high and low of the trading sessions are. I don't use these to trade off of necessarily, but I like to be able to have that guide, that roadmap. Now I'm switching to my account. On trade day, I'm currently being evaluated. I have well exceeded the 10-day minimum on that trading account. We entered in, and that was a loss pretty much right off the bat. So I thought we were going to continue that downward trend, but what it did instead, right there, was stick with what was the low of day thus far. What we're going to try now is maybe, since we've continued that downward trend and it's tested that line so many times, the hard part for me, I know mentally, psychologically, is I like to be able to see the high and low of where my entry point is and then where would I want to get out. And if I don't have that bottom layer, I just work so much better in consolidation. And when we actually had this trend going, I feel like I have one arm tied behind my back sometime, and it's something I need to continue to improve on. But we might be bouncing off the moving average here, and that would be a good place for me to get in. If it hits it again, I might come right in. I can't remember how I did it. And Oh, that would have been it. There we go. And there we are. Hit my profit target. And what I do is I have a one-win system. So I switched over to my sim account so that I can keep practicing for the next 10 minutes. What I would like to do eventually when I get good enough is trade from right around 8:32 Central Time until 8:42. And that's just because if any news is coming out, it comes out at 8:45 Central Time, and I just don't like to mess with that. It's just too crazy, too unpredictable. So right here, I knew, or I'm thinking it's going to bounce off that first standard deviation again, and clearly it didn't. It is going with the trend, and now it's going with the trend heavily. Fighting it when it's not in consolidation, like you see up round from 8:32 to 8:34, that's really a sweet spot for me. We're just taking a look back at the wider angle to see what really the scope of everything is. I trade better a little bit zoomed in right here. I used to trade in even more zoomed in than this, but I wasn't able to get any good gauge on how the trading session was going because I was only looking at 4 candles. But I like to be that closed in, because if it was hovering, maybe I was positive 2 points, I might lock in at least 1 point. That way, at least it wouldn't go negative. A lot of times on my wins, it shoots right in my direction almost immediately. So if it takes a little bit too time to wander, I lose that a lot. I found in my back testing. We'll be making a video in the future about back testing and how that's really the best way to make your personal strategy, and not necessarily utilizing supply and demand zones, for example, or anything like that. Those are super good guidelines to have, but you can't use it as a set rule. If it was a set rule, somebody would have created a AI system that would make trades for you already. Maybe it does exist and we just don't know it yet, but I just feel like it's way too unpredictable. These are humans that are making these trades, so you can't just go off of lines and dashes all the time. You have to use a lot of subjectivity. Now that line at 275 there at the bottom, that blue line that I've marked off, that's something that it's hit off of a couple of times. But what I really wanted to do is go back there, and maybe I would take a trade bouncing off of it. But what I really should do mentally is, we are in the red zone right now. We are below this. This trading mark does a really good job of green in the areas that are above the moving average, and then red below. Like the whole screen shades red, you can see. So I want to hopefully get a system created and worked through where I treat the green and red areas differently. But currently I'm just dealing on such a smaller level than that, which seems to be working okay. I have been funded in the past through a trade day, but blew my account pretty quickly with them. And oh, there we go. See, it just kept going down. We are following the trend today. And today's been a very angular day anyways. Like I said, 4 minutes before the open, we started really shooting down. So maybe if it was a day of consolidation, that would have made more sense. And you can even hear me talking through it that I still don't have the right mindset for that yet. Now, why did I move from my my trading account to my sim account? Because I want to be able to test some of my little theories here without any repercussions. I aim for 1 win out of 3 trades. If I lose 2 trades, then I'm done for the day. If I win 1 trade, then I'm done for the day. I have a 5-point profit target and a 2.5 point target or stop loss. So if I lose both, here we entered in again, following the trend, got stopped out again. So today just wasn't my day in terms of sim practicing. This is also why I'm not a profitable trader yet, because I'm still figuring out what works for me. And what I have hard data on is the only thing that I trade on with my actual account. And this trend is just going down. I need to trust it. Another video will be about trusting the trend, and these candles that you see where it's red, 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 to think that you are going to find the one that's green out of all of those, it just doesn't make sense that you're going to find the bottom. Look, right here we found the bottom, but we didn't. I had no idea that it was going to turn around that much, right? It's a lot easier to look in it in retrospect. But also, it's very important to record your trading. You don't have to post it to YouTube like I do, but I've always tried to record my trades and have some sort of data keeping system. Especially since if something goes wrong for one day, then you shouldn't alter everything that you're doing yet. You need a substantial amount of data. Mark Douglas used to say 25 trades was enough about a very specific thing. Not just your whole scheme, but one aspect of that trading system should be able to be looked at and adjusted with about 25 trades. Yep, so I think that's about it. So in terms of my trade day evaluation, we've gained, I think it was about $30. So nothing too crazy, but I used to go for those bigger swings and I would hit them, and that's how I became a funded trader. But I also blew it just as fast. So I'm much more in the long game now and want to hone my craft trading one unit for the Nasdaq futures. And if I get that system down, then I'll be able to trade 2, 3, 4, 5 units and not have it be any different. Just use the same mentality and be able to compound my account over time. Remember to follow the trend. This stuff takes practice. I'm here documenting my journey so that you know that you are not alone on yours. So thanks for watching, guys, and I will see you tomorrow for another analysis.